Hi guys, this is CJ from Agent Smartly. Today we're talking about investment strategy and some key terms for your California real estate salesperson exam. By the way, all those key concepts and study tools are available at agentsmartly.com. Okay, I will leave the website link in the description below. All right, let's get started. So first, we go to the website and we will see the key concepts points and scroll down here under the, let me see, right here, investment strategies and terms. We click right here, we will see, we just break down all those like key terms. So think of investors use money like building blocks. They can stack, they could borrow, they could put, or passively invest. And that's investment strategy, right? So those terms describe common ways people use financing group the money and to make real estate profits. Once again, make the money. So the pyramiding means borrow against one property to buy another. And do not confuse arbitrage with appreciation. Arbitrage means profit from the interest gap. So, technical distinction, a security exists when investor expect a profit mainly from the effort of others. So for the memory trick, picture PAPS, pyramid stacks, arbitrage spreading, and the pool syndicates and security setback. So there's an example. So Mia in San Diego borrow against her duplex to buy a small rental house, which is pyramiding. Later, she joins an investor who let a manager run the deal that might be a security. So do not confuse a student mix up a syndication with security. Syndication is a pulling the money. Security adds passive profit from someone else's work, often requires security license. So once again, syndication is about the pulling the money, and the security is sort of like a stocks, okay? That's like, it's a representation in the investment and the market. So for the exam tip, exam will offer, sometimes we'll say, hey, the syndication, when the better answer is security, so make sure the distinction, those two terms, okay? So I know it's a little bit complicated for this session, so I made this an infographic, you see better. So once again, 4 ways the investor to build profits. Of course, there's much more than 4, but in this particular class, we just talk about those 4. First one, pyramid stacks. So it's like you already have a house or have some property, and you use that property to buy another to against another. That's the pyramid stacks. You see right here. And arbitrage spreads means you buy right here low and sell at high. So you got the profit and based on the interest, right? The gap. And pooling indicates means a lot of people put in the money into the one put and use the money. And security setbacks, once again, it's more like a security. It's like you buy the stocks, right? Index fund, etc. So for the keyword rules, the pyramid builds downline, and arbitrage, you buy low and sell high. Pooling, they pull the money from many. For the exam trip, they will say, oh, is pyramid equal illegal always? Maybe, maybe not. So depends on the question, right? Security managed the property? No. Security, once again, it's like your stocks. For the memory trick, we remember the pyramid is you build and buy low, and also you could put and also setback, okay? And once again, if you guys study for your salesperson exam, you might check out our website, agentsmartly.com. You see all those 144 essential key concepts for your exam. It would be great if you could understand all of them. It will help you to pass the exam. And next, you can also practice by all those full practice exam, and also you could also practice by different subject or topics, right? Then we also track your progress. You can already see right here. You see that, everything right here, you review everything, etc. And yeah, that's pretty much about this video. And if you like the video, make sure to subscribe to the channel and like the video. Happy studying. I will see you guys in the next week.